Happy Tuesday, everyone. How is everyone doing? Hope you guys are having a great Tuesday and enjoyed a good long weekend. Got a chance to remember for us who are Americans that our freedom was not free, and get a time to think about all those people who maybe are missing someone at a grill out on a Memorial Day because they gave the ultimate sacrifice. So good moment of reflection for me and my family, but also just so thankful that because of that, we get to enjoy frivolous things like going to the park with the kids and having ice cream. And just easy, obviously, to think about that in terms of, the light, easy taking it for granted, but it's all inheritance that we have as Americans.
Good morning,
Morning, Graham.
Nate. Messing around with the new setup today, trying to rearrange my office.
Are you at home? Is that your house?
Yeah, trying to rearrange the office situation, but I'm getting interesting internet access. Well, it was really great the other day, and then today I checked in, it was a lot slower. So you'll have to let me know if I'm chopping at all.
So far, so good. Yeah, you look very professional this morning.
Well, I got one of those fancy looking mics like you have.
Oh, nice.
It
Well, you
also
got
it also lights up, I think. I don't know how to work it.
well, that is nice. Well, we've got an absolutely packed house this morning,
Yeah.
which is awesome because we've been talking about getting after it today. A ton to cover. I mean, overview, sectors, seasonals, trade ideas, predictions. It's gonna be a really packed morning session. And hopefully all of you guys are buckled up. Like I said, got a coffee maybe with you, got a notebook, and you guys are ready to jump into it. But yeah, I just wanted to say first of all, for all of those of you who have people in your family or relatives, friends who served, or potentially gave that ultimate sacrifice, that we're so thankful for you, especially as Americans. So thankful to be in a country where we have that inheritance, and hopefully you guys were able to take a weekend and reflect and enjoy the fact that we live in that kind of environment. Um, but yeah, Graham, I don't know if you anything to add on that front or if you're ready to dive in, but
No, I
just
just echo that as well. Second everything you said, but for sure, let me go ahead and who's sharing screen right now? Is that you?
I'm not sharing. It's just
But
I think it's
Oh,
open
I
for
can
the
give it.
takeover.
oh, cool. I'll have to steal that screen from you, and then we'll get rolling.
Oh, you're sharing? I couldn't even see this. Oh, that's because my view was wrong. I'm
Oh,
like those people who in the chat are always saying we can't see your screen, and I'm saying, what are you talking about? All right, good to go.
all right. Let me get this all set up, ready to roll. Obviously, guys, something big today. We haven't really given you too much information on it. You can see right there on the banner, 10K trade coming up here in 2 days class. So that's going to be like the highlight of today. So make sure you're ready to take notes. Again, guys, don't feel like when we get this trade set up, you have to be punching as fast as possible. This will be recorded. We'll make sure you guys have access to this recording as well. But we do want to show you it because it's a pretty sweet opportunity. I think if you guys have been paying attention, you will agree with that too. Go ahead and post in the chat. We've got a huge room. This might be our biggest opening playbook attendance yet. Nice to see that the show is growing. We've been getting some good feedback. Post where you're tuning in from here in the chat.
Yeah, I think this probably will end up being our biggest crowd ever for an opening
Yeah,
playbook, which is
it was
awesome.
awesome. I got
Got a
my
couple.
McDonald's coffee here that I picked up this morning. Top shelf.
I got a couple nice emails. I don't know if Jerry's in the room, but Jerry, thanks for the email. Jerry said, been tuning in on the West Coast, so having to get up super early, but opening playbook has been worth it. So
Oh, very
uh,
nice.
got that, and a couple other ones for people who have been kind of behind the scenes. We don't always see in the chat, but have obviously been following along. So love getting those kind of feedbacks, especially if we're making an impact, which I know a lot of you said opening playbook was one of the more profitable things that you've done in 2025, which is pretty cool because it's just a free
Awesome.
session where we're hammering out trades.
Yeah, that is awesome. Well, here, guys, here's the list of open trades I have. Like I told you on Friday, just to free up some capital, just because we had so many trades going, I ended up taking some profits. We took a loss on Lilly. We took a loss on T-Mobile, but I ended up taking like five profits off the board, including that 350% winner on Microsoft. So that was awesome. So here's what I have open right now at the moment Seasonal trade on Netflix is looking good too. Bitcoin, I mean, we have been just hitting it over and over and over again, and again up nicely there. So, just to show you guys what I currently have open. Now you don't have to mirror me one for one. I know Nate has some additional positions open as well, or some just different ones. We give you guys a lot of trades here, but just to give you a screenshot of where I'm at right now. For the Telegram of the week, I've been hammering Oklo. It's been a beauty. It's pretty flat today, to be honest, but we hit it out of the park in a couple of trades there. And I've just been talking about it all over the last 2 weeks, really. So if you guys aren't in Telegram, make sure you're in Telegram. I'll post the link here for you guys to join. It did pop back, Mike. Yeah. There's my link to my Telegram where I post this kind of information all the time. Here was a bonus for you guys. GEV, another stock that's been really strong. It's up another 2% today. Nate, have you been looking at GEV lately?
I, I don't even look at the chart that much. I just see that my portfolio goes up nonstop with that thing. It's unbelievable.
It has to stop at some point, but it's gone up like 2% every single day for the last 2 weeks or
Well,
so.
funny story about GEV real quick. Uh, I think it was like March of 2023, I want to say. No, it might have been no, but it might have been closer to last year. Anyway, um, right after the split. That would have been after. That would have been 2024, right?
I don't even know if it's a year old.
Okay. It was right after the split.
Mhm.
My both my girls had their birthday where I add money into their account, and then they did like a little extra work, whatever. And so they ended up both getting like $100 um, added to their little stock portfolio. And my oldest daughter wanted to do Apple, so she put in Apple. And then my second daughter, Olivia, said like, "Oh, just like I'll let you pick that." I'm like, "Well, GEV, just split it's whatever." So I put her whole $100 into GEV. So fast forward like 10 months, 12 months, I don't even know. Then and they're always asking me, "How much is our stock account up? How much is our stock account up?" Poor Addie's like break even, and Olivia has like $400 in
Oh
there.
my
So the
gosh.
younger daughter's just like running away with it. And of course, she's bragging every day about how much money she has. So
That's amazing. That is hilarious. Yeah, it's just been a monster of a stock, doing really, really well. Um, Now here next, and you don't give it away here yet, Nate, but give us a little highlight, a little teaser of what's to come today in this very session here live, where you're putting down 10 G's on a trade.
well, I'm putting on 10 G's on one trade. Plus, we got three other ones as the little bottom beta.
Yep.
But that's on the underlying. Here we're going straight for the options. Going to have a couple high conviction trades that I'm pretty pumped about, and the good thing I think is about all of these trades, except for maybe one, is that they are a little bit longer term. They're a couple weeks out or so, so we have a little bit of time to get into them. You don't have to, like Graham said, panic and start hitting buttons.
Right. Right. All right, cool. That'll be coming up today, guys, here in just a few minutes. For the morning market update, guys, we do have markets up nicely over the weekend with the positive news coming out on tariffs, that there should be progress with the EU. We'll see what happens there. But Nate, you want to give us a quick overview of what you're seeing?
Yeah, so I mean, one of the things that I've been talking about is that I think we're in a very top-heavy recovery. And so if you're like me, by the way, we didn't even get to shout out all the people. I'm sorry, Gina Donvit. Like, there's literally 280 chats from people who chimed in that normally we like to say hello to everyone, but we wanted to jump in. But let me ask you for one more chat participation. If you're like me, you think that this market is headed to all-time highs and probably going to squeeze up and beat all-time highs by a couple percent before we get another like major flush. That doesn't mean we're not going to have any 1-2% drops, but I mean like before we get a major flush. Give me a yes in the chat if you would agree with what I'm kind of thinking is a squeeze up to all-time highs, even if the market economics aren't really as reliable as they should be to get that.
Or give a
So
no if you don't think so.
yeah, or no. Hi Rafi. Hey everyone. Lots of yeses. Dave, M. Kirk. Okay. So for me, what's interesting is I do think that that's the likely path forward. Now I'll change my mind if the market moves the other direction. I mean, I'm not held to that, but um, SPY and IWM since April 7th, kind of leading, quote unquote, leading this recovery in the broad market, they're up 16 and 15%, which is a pretty big move since April 7th. But if you click the next slide and add QQQ in there, Now you see QQQ's up 22%. By the way, that's before today. It's actually up more like 25%.
Mhm.
But then you add in the mags and you're up 26%, which, oh, again, since April 7th, we're talking about, 40 days or whatever. The difference between a 15% and a 26% run is massive. I mean, that's a huge difference in kind of a underlying. And then you add in IBIT and it's up 41% since April 7th. So what I'm trying to draw your attention to here is that if we're going to get that kind of squeeze, I think it's going to continue to be a top heavy outperforming market. So I like, not trying to be cute here and get these undervalued plays, but just go with the leaders. Trade the mags directly, trade IBIT directly, let the top dogs continue to win. Because if you are in my camp and you think that we're going to get a bigger market squeeze before we get our next correction, then I think these top heavy, more concentrated instruments like IBIT and mags are going to lead the way. So just one of the things that I'm really keeping a close eye on. If you're going to be bullish, you might as well be bullish in the instruments that are really going to lead the pack.
Yeah, definitely. And the interesting thing is like Mags, QQQ, those stocks took the biggest hit during the correction that we saw, the quick bear market we saw. So it makes sense that they might be up the most. Bitcoin, on the other hand, did not take that massive hit, but it's still leading the pack. So very,
Yeah.
very strong stuff there. Now, market wide, let me look at it here on my end. Pretty similar to what we're seeing here, up slightly from this amount, but as you can see, most markets up over 1%. QQQ is now up 1.8%, which is the NASDAQ 100. Very strong reaction to the weekend news that we will be pausing the tariffs on the European Union, which was, I think, was announced on Thursday last week. We're putting 50% tariffs on. Well, those have now been paused. The rumor is that there's good trade talks going, and it's kind of sparked the both parties to come to the table and get a deal done. So, hey, if we get more good news like that, that's only more fuel to the fire to send the markets to what I think to Nate to all-time highs here in June. So it's very, very good to see, and hopefully we keep starting to see these positive dominoes keep falling. In the news this week, the big news is on Thursday morning, which is GDP, which is essentially the earnings report for America. Here's what's going to be interesting: is it's forecasting a shrinking GDP, shrinking economy for the quarter. If we do get that, that technically means that we are in a recession because it's 2 quarters in a row of negative GDP growth, which would be interesting. Now, I've still yet to find this chart, but I've been meaning to find it for you. I showed it a few classes back, but essentially it shows that markets typically bottom about 6 months before a recession
Right.
is on paper. So if that bottom we saw a few weeks back was the true bottom, and we do get a negative reading here, that will fall right in line with that the bottom happened before the quote unquote recession actually hit. Now I put that in quotes because I don't know, let's say we're in a recession. Does that mean that this is going to be a long-term one or just a quick one like we saw in COVID? I lean towards a quick one where we don't really see the effects of it so much. I think we already have seen the effects of it. I think the recession has been the inflation number so far and how people have been kind of pinched from that standpoint. But I don't think we're going to see a massive 2008 sort of crisis from this. Not right now, anyways. For next week, in the economic news, biggest things are jobless claims on Thursday and unemployment rate on Friday, but those are very normal numbers. They will move the markets 0.5% either direction, but nothing crazy big. There's not going to be a whole lot of movement on it unless there's something totally out of the ordinary. Of course, we'll cover that next week. Now, for your charts of the week, this week it's a little bit more of a broad term, long term view, but I want to show you this one again. Just one more time. I'll show it to you a few more times probably. But I think this is so cool to see people compared what's going on right now to the dot-com bubble of the 2000s, which it could be. It definitely could be. I just don't think we're there yet to that extreme level. And if you look at valuations, we're not even close. I'll pull a PE chart here one of these days and show you guys how it's nothing like the 2000s dot-com bubble, at least not yet. So if we look at the release of Netscape and pin it with the release of ChatGPT about 2 years ago, and we draw the NASDAQ on top of each other, look at this. This blue line is the release of Netscape, and this red line is since ChatGPT. Here's that most recent dip we saw. It is pretty wild and crazy how close the two have followed. Now, if this holds up, as you can see, we are nowhere near the top of this so-called bubble. Now, I'm not saying we will definitely get all the way up here, but I'm just saying if you guys want to see how this actually compares to a previous market bubble, here's your look. So yes, things could be getting more overinflated or more inflated on valuations. Definitely could see that, but we're not to extreme levels just yet.
Yeah, and I think there's still so much news driven potential in AI before that bubble starts, getting toward the top. Which, like I said, I don't even think it's a bubble. I don't think there's any way that it's a bubble because I simply think you can't overvalue AI at this point. Our minds can't even wrap around the potential of AI yet. But I think, over the coming years, we're going to see AI is doing this. Okay, new robot does this. Okay, this, AI now replaces this. It's just going to keep kind of getting those dominoes very much like the internet. Okay, the internet, let people do a couple simple things. Oh wow, now the internet can do transactions. Now the internet can do this, and I think we're like pretty early in that stage.
Yeah, I think the bubble will be in some of the companies that are leaning into AI but not really using or
Yeah.
not really seeing positive margin growth from it, positive revenue increases, and like AOL, kind of fizzle out. But the companies like NVIDIA, Microsoft, even Apple, they're going to be here to stay and going to benefit a lot. Here was something interesting I saw, and this actually makes me want to maybe buy puts on Google for the long haul. If we look at the rate of adoption on different tech releases, obviously here you have Spotify, which is music, Netflix, Airbnb, Twitter, Facebook, Dropbox, WhatsApp, Instagram, TikTok, which TikTok has been huge. You can't trade it, but it's been just a huge platform increase. Look at here. Here's ChatGPT. It was the fastest service to get 100 million users. Did it in under 2 months. So it took Netflix 10 years to get 100 million users. It took Facebook 4 years. Took ChatGPT 2 months. And now we're starting to see the dominoes start to fall there. Where look at this usage of ChatGPT relative to Google for this guy here gone from 1% to 40%. So a lot of clicks, a lot of traffic, and this is myself included. I actually, Nate, I've got a Ford Expedition. It shakes on the highway for whatever reason. Ford can't figure it out. I can't figure it out. It's been the biggest pain in my butt, and I've been talking. I haven't been Googling what to do. I did, and there was no real helpful results. I've been going back and forth with ChatGPT now, and it's
Yep.
given me a couple different things. It's given me a couple local shops to go to. So ChatGPT is not just like a cool tool for doing fun things. It's also replacing Google search right now, and it's more effective. And we're seeing it each and every day with the new releases really start to take the market share away from Google. And we're seeing Google have an ads problem right now as well. So just something really interesting to see as ChatGPT continues to grow. Obviously, I think the best way to get invested would just be Microsoft since they are a stakeholder in it. You can't trade ChatGPT directly, but it will be interesting to see. Nate, you talk about profit pairs and those links. It'll be interesting to see if we see that Microsoft trend and the Google go in the opposite direction. I'm not sure what your opinion is there.
Well, I don't know if you took a sneak peek, but I do have put Google puts in a free profit pair trade today
I did
that's coming
not.
soon.
I
So,
did not.
so
That is hilarious. Another cool chart here, and this is Germany and China, but we talk about nuclear energy, Oklo, GEV, SMR, a lot of good tickers for this new nuclear energy source. Obviously, we've had it for years, but really the world is leaning into it now. Look how much China has been getting invested in it.
yeah.
I need to put the chart of the U.S. on here, but U.S. doesn't look all that different from Germany. Germany's all the way out of the game. They're in bad shape right now. U.S. has been kind of trending sideways. Now, obviously, Trump just signed that deal the other day, the executive order that's going to make our chart look a little bit more like this. But it's just going to be a catch-up game. It's going to be a energy race right now for obviously. I think the most important thing is powering AI, but there's all sorts of other benefits to it as well. So here's just an interesting chart just to show you what China's doing when it comes to this space right now.
And I mean, not to bash Germany. We love Germany. We have lots of German friends. Half of our company is German, but their energy plan has been a disaster. I mean, literally, it's been disastrous for them. They're now just importing massive energy because they took away and said, we're going to go green on a pace that doesn't make sense for what their economy actually needs. So it's going to be interesting if they don't do something, they're just going to have to use what other economies are providing anyway. So it's kind of a lose-lose in that situation. You're either importing the energy or you're turning off the lights on your people.
Yeah, and when we talk about opportunities in stocks right now, that's why I think that these like Oklo, which again, very volatile. I don't recommend going all in like I did. Um, but I do think that they're going to be in a catch-up game right now where it's going to be very, very bullish for the stocks in the long term. Moving on to gold. I saw this chart. It was kind of a gold fearish little chart that gold saw the third largest outflow in history. You can see it there. Money moving out of, I think this is GLD. I'm not sure. Wait, let's see. Flows to gold funds, all gold funds. Okay. Third largest outflow in history. To me, I think this is misleading. I think this is manipulated data because if you think about it, if gold was 800 bucks an ounce back here, which it wasn't, it was 1,500 back here. That means that let's say someone moved 10,000 ounces out here. That's $1.5 billion, I think, if my math's right, or one and a half, something like that. But here at $3,000 an ounce, that is not near the amount of ounces moving. So this isn't outflows in per ounce measurement. This is just dollar amount. So of course, when gold is doubled, an
Yeah.
outflow like this really isn't that extreme.
No,
So I
but it
just,
is exactly what we predicted in opening playbook 2 weeks ago, where he said gold is gonna, still like gold long term. I still have gold long term, but it's gonna to feed the frenzy of the risk on upside. You're gonna
yeah,
have to get some flushes in gold. Exactly, kind of I think what we plotted out.
yep, exactly. Not all I'm trying to say here is I don't see this as a short the market signal.
Yeah.
I think this should be shown on a percentage of market cap basis on outflows. And if so, this one would look a lot more like up in here versus this big leg because that's a dollar amount. The thing's doubled. Of course, the dollar amounts going out are going to be bigger.
Yeah. Yep.
For the market overview, let's go ahead and map out where I think the market's going. This was last class. I hope you guys come here every single day. 10 a.m. We do it every day. Every Tuesday, I give my market outlook, kind of my roadmap for the week. Last week, 10 a.m., I told you I think we're going into a cool off zone here where we'll probably get back down to the 200-day moving average right there where you see that arrow pointing. And what happened? Just so happened that we did exactly that.
Round
So
of applause
hopefully,
for Graham, everyone.
yep,
Perfect call.
I know. Yeah, yeah. All right, all
Seriously, you
right.
nailed it. I mean, you got it. If people are paying attention to opening playbook, it's amazing.
It's my hope that it's helpful. It gives you guys some guidance in your day-to-day decision making, kind of just like a roadmap you can look at. So it worked out this last week, but let's go ahead and see where do I think we're going from here. Well, right now, if we're looking at the fear and greed internals, market is still strong. It's not as strong as it was on the greed factor as last week, but I think that's good. That's remember I said we need a cool off zone. We got that small cool off. That looks really like a healthy number right there. When we're looking at the put to call ratio, right back there, 0.95. Again, anywhere between 1 and 0.75 is a very, very healthy number. So we even went closer to 1, which makes me a little bit more bullish than normal. So very, very good to see that. And if we're looking at the percentage of stocks above the 50-day moving average, I zoomed out of this chart just to show you guys what's typical in the long run. So here we've got about a 3-year look. We took a dive from about 70% of stocks above their 50-day moving average to now about 55% of stocks. Now the reason I zoomed out was because that looked kind of scary in a close-up view. But if you see here, let's look at the bull market of 2023. Here, plenty of slides like that in a very, very crazy strong market. Same thing here. And look how quickly this can change, right? Does anyone remember the crash of 2023? I don't because there wasn't one. But look how quickly that can change. So just to see a slide here, not a bad thing, not a scary thing, very typical in a very healthy, good market. And again, more reason that I think that we'll see more upside ahead. Same can be said about percentage of stocks above their 200-day moving average. We got that big climb up, right? I gave you this number. I said when we get to 15, buy the markets every single time. We did that here. Shot straight up, almost got to 50%. Had that little pullback last week, back down to 40. But again, very normal. Look, up here to 40, down to 30, went higher, 50, down to 40, actually all the way down to 37-ish. So this is very good, very healthy. Love to see it. With the seasonals, again, you've probably heard the old adage, sell in May and go away, which can be true. Markets can be choppy over the summer. They definitely are. Long term, though, you are better off investing during the summer than avoiding the markets during the summer by about 100% return on investment over the last 20 years. So, yes, it is true the markets do typically slow down in the summer months, but in my opinion, that does not mean sell and watch from the sidelines because you miss out. With that said, June is typically a flat month. So we're at the end of May here, going into June, typically a very flat month in the market. You can see there is no bar here because it's right at 0% on average over the last 60 years or whatever that is. So just something to keep in mind. We just want to be more selective in our stock picking going forward. Quick update here on the presidential seasonality graph. For those of you who are new, I know a lot of new faces are here in the room today. This is just the average S&P return in the first year of a new president. Here's the first year of an election cycle, the green line. Here's when the new party comes in, that red
Just
line.
right on pace. What I mean, looks perfect.
Literally right on pace. It's crazy. Now we do have a slide here in June, so this will be interesting because I think that we're going to actually diverge from this a bit here, just like we saw back here in March when I thought it was going higher and the markets ended up going lower during March. I think we're going to see the similar thing to the opposite effect here in June because the news is now on our side with positive deals coming up with tariffs and such. So I think if I were to draw a picture of June, well, this is going to be a little bit interesting because I'm calling all-time highs in June. But I'm guessing it'll be a little bit more like this, and then we'll flow into that healthy July as well.
Well, and then we might overcorrect in the fall too. I mean, it would make perfect sense
I
because I
think
think
this
we've
will
been
be very
saying
normal.
all along we end up seeming to average back down into reasonable ranges, but we just have way more extreme moves on both sides right now.
Exactly. Yep. So my upcoming prediction, I think we keep bouncing from here. I think we go test that 600 number on the SPY. Maybe this week, but probably around next week. Obviously, a lot of weight's going to be on NVIDIA, which we'll talk about here in a second. But we hit that 200-day moving average. Today, we're happen to be bouncing so far. Pretty healthy. Let me just pull this up here so you can see. So here's the SPY. Blue line's 200-day moving average. I mean, we literally just hit it and bam, we're up. Now, obviously, this is a news-driven move. I don't think that anyone, we joke about this. Someone's going to go back in 5 years and look and say, look, it bounces every time off the 200-day moving average. Well, guys, it bounced because we had positive, really, really positive weekend news. But it does happen to make a nice little technical setup for people. So I think next level here we're testing the 600s, right about here where my cursor is sometime in June. We could get it this week. Obviously, if NVIDIA smokes earnings, I think we will get it this week, but we'll see. So my next level here, 600. The key number to kind of watch out for is 575. We don't want to see it close below 575, below the 200-day moving average. That would be a sign of weakness for stocks, and we'd probably get a gap fill about down here to 555 level. So that's just something to keep in mind. I do think we're going higher. I think 600 is our next number we're going to hit. But keep in mind, set an alert. If we get a close below 575, that might be time for a stop loss or taking some profits off the table because I think we'll fizzle out a little lower from there. So there's my prediction for the week. Hope you all caught that. Now for earnings this week, it's another big week. We had a couple quiet ones, but now we have a big one. NVIDIA is tomorrow after the closing bell. We also have Salesforce, C3 AI on Wednesday as well. But the big one obviously is NVIDIA. And the question from what I've seen, the question isn't, will NVIDIA have great earnings? Of course they will. The question is, are they going to outperform Wall Street's expectations for their, they think that their earnings are always going to outperform. So it's just a little cat and mouse game we've got going on there. Now, I am interested. We saw Microsoft go absolutely crazy on earnings. I'm interested if we see something similar here with NVIDIA.
Yeah, I like the NVIDIA's chances because simply they're still undervalued relative to their previous earnings. And so just from a simple, I think we talked about this on some of the other ones. Yes, they're going to have really high, lofty expectations, but people thought that they were fair value at all-time highs and beating expectations, and now they have some extra buffer room, and I think that their earnings will be incredibly good. I guess one of the things is I don't think, even as there's been some inflationary pressure and some economic challenges for the regular Joe, I don't think mega cap companies are slowing down their R&D and chip buying. So, I think they're still in the best position of anyone.
Yeah, no, I agree. Agree completely. Also have Costco, Dell, Marvell on Thursday as well, which are some good sized names for earnings too. As far as the sector rundown, again, I know we've got a lot of new faces here. I am flying through this today. I think I normally go slower. I don't know. I just, I don't want to skip over anything. Don't want to skip over anybody. But we're going to break down the S&P 500 into the different sectors. There's 11 different sectors in the S&P 500. Think, technology, real estate, industrials, energy, financials. When you break it out, break it apart. And that's what I'm doing here. This is the S&P average performance by month, by sector, over the last 30 years, 35 years. So you can see here, for example, for those of you who are new, if you want a screenshot, take a screenshot of this now. It's a great little card to keep on your desk. It works year after year. Obviously, eventually we're going to have to update it again. But let me just show you how it works. For example, if we're looking at June, which is upcoming, and we want to see how technology normally does. What are the stocks like Apple and Microsoft, et cetera, et cetera? How do they typically fare in June? Well, that sector is typically up 0.2% versus like material stocks. Let's look at materials here. If we go to June, materials, normally materials drops in June. So that's what makes this card kind of cool. Gives you just a sneak peek of what historically happens. Now, in last class, I've been highlighting Bitcoin in blue for weeks now, probably months now, because I said you got to buy it when it was 80. It dipped down to 77, came back up to 81. It was showing remarkable strength. Nate and I have been beating the doors on it. Buy, buy, buy. Just hit all-time highs last week. Got a couple trades on it that have done really well. So that's why I've got IBIT here. I think it's going to 125 to 150 here very, very soon before the fall. Again, before this fall, not next fall, this fall. So it's the last kind of little melt up I think we're going to see here. I also highlighted these sectors here as well as my top ones for the week. And let's look at what happened week over week. This was the most boring week in sector movement I've ever seen here in the opening playbook. No movement. Industrial still the strongest. Communication second. Technology, discretionary. The only ones that moved was real estate dropped a slot and materials moved up one. Everything else stayed the same, which isn't very normal. Normally we get some pretty big shifts
Yep.
here on the power rankings, but week over week, not a lot of movement. And we've got a question here. How do you get the symbols for the sectors? Take a screenshot of this. These are your symbols for the sectors. It also tells you what they are. So take a screenshot here if you want to know what symbols for each sector. You can also trade these individually. So if you don't want to trade Microsoft or you don't want to have to pick between Microsoft or Apple, you can just trade XLK, which will be the basket of tech stocks.
Also, great little website I'm popping in the chat. This one lets you just sort through the sectors, see all the stocks that are in them, how much they're weighted, what their ROI is, month to date, year to date, all that good stuff. So if you're interested in sectors, which I love trading sectors, one of my trades we'll give out here in a minute is a sector-based trade. That's a great little website.
Awesome. Love it. So this week for the top sectors, I've got the same picks. I'm also going to include industrials. They've been up there very strong week after week after week. I was looking at those constituents, like that link Nate just posted you in the chat, and some of our favorite stocks are in there. GE, HWM are two of my favorite stocks to trade. I was going through some of these constituents as well. These are some really good names that we should probably add to our watch list. RTX, ADP, and DE have been very, very good looking stocks in a very, very good looking sector. So last week, I showed you my mistake was I traded Lilly, a weak stock in a weak sector. Bad idea. What we want to do is line up strong stocks in strong sectors, and that's exactly what I've tried to highlight here for you guys. If you want to add these tickers to your watch list, very, very good stocks. HWM didn't make the cut because they weren't one of the biggest holdings. However, HWM is another one that would have a green arrow by it if I could fit it in this screenshot. So those are 5 stocks in the industrial sector to definitely keep your eye on. Very good trading opportunities coming up. For the nitty gritty, I'm going to flip through my watch list for the week, and then I'm going to turn it over to Nate for the 10K trade. Plus, Nate, you have 3 trades for us. So we got a lot to
Indeed.
cover here in a little bit of time. First off, top Apex signals of the week. This is my weekly price action indicator. Gives us entry prices, stop outs, profit targets, all that good action. We've had IBIT. You can see this blue arrows here. This is a weekly candle. So this week, previous week, 3 weeks back, 5 weeks back, multiple entries, multiple profit targets hit. So here's a fresh one for you guys. I'm going to post it here in the chat. IBIT target. This is the Bitcoin ETF. No different than buying SPY or QQQ. It's just trading and tracking with Bitcoin. Stop price 49.64. As you can see, been on a hot streak. Looking really, really good. Now, I'm not going to give you the options here. That's because Nate's going to give you some trade with some options, so I don't want to overload you guys. But if you've been following along, you kind of know my option selection process. Just kind of do that here with this pick. Another one that I like this week, AJG. We saw insurance cool off last week. Progressive went against me. AJG dropped a little bit, but this one's still a very, very strong trend. Very, very good, healthy signal, and I do think we will get this profit target. So this might be one that you trade just on stock, not necessarily on options. You can totally do the options, but this is a really good stock buying opportunity in my opinion. Profit target, I'm just going to abbreviate as PT here, and when I type it in the chat, 358.47. Stop loss is 284.07. So this is one, again, just to reiterate, I would look to trade the stock. I love trading these insurance stocks and options. They're just very, very good, strong, healthy trends. And as you can see here, this one's got a little bit wider profit target and stop loss, but it hasn't hit a stop loss in over a year. So it's just been profit target after profit target with AJG. And I expect the same thing to happen here. So those are in the chat right now. For the hot sheet pick of the week, now it's not May 30th yet, but actually, let me explain. The hot sheet is our seasonal stock picking sheet that I use. Basically, just looks at stocks that have gone up every year over the last decade. And then we trade those same dates year after year. So Domino's Pizza comes up on Friday, May 30th. Right, this one here in the chat for you guys. DPZ is the ticker. May 30th is the entry date. And that's a 22-day hold time and 5.3% average gain on the stock. So there you guys have it right there. That's my seasonal pick of the week for you guys. That would be a Friday entry. Hold it for about 3 weeks. So if you're going to trade the options, maybe select the June 20 options. Those line up really, really nicely with this. And know that it typically gains about 5% during that period. So it's at 489 or 480 right now. That would put it about 500 by June 20th. So you can select your options appropriately. So now, the moment we've all been waiting for. Dun, 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 dun. Nate, do you want to take the screen and go from here?
Yeah, I'll flip over and take it. Let me just.
So we got the 10K trade coming up. Again, it's going to be exciting, going to be fun. Don't feel like you have to rush into it.
And you might, guys. There's going to be 4 trades here. You might want to take a lot of these trades. You might want to take one of them. By the way, special congratulations, Graham. I don't know if you saw. Special congratulations to everyone who made it in the room today, because it turns out we actually maxed out the Zoom room, and tons of people are not even able to get into the room. So if you're in here, you did well.
There you go.
you
so
got
it is limited spots here on the opening playbook.
We didn't mean to make it limited spots, but we did, because the Zoom room caps out, and we realized after the fact that a whole bunch of people were trying to get in the room that are not in the room. So well done if you're in here. Yeah, exactly. Mike said, so exclusive. This is an exclusive club now by accident, but oh well. All right, so we're going to jump in, like I said, a 10K trade and a couple others to cover here today. And sorry, I think my mic is being jumpy, but hopefully you guys can still hear me well enough. All right, so probably not going to shock anyone here what my highest conviction trade is for you, what I've been calling the best asset on the planet since the beginning of April. Of course, we are talking Bitcoin. So my number one, my high conviction trade here is going to be on Bitcoin. Now, my initial goal for Bitcoin is 125K, but I know a lot of really smart guys like Jeffrey and several others here who think 150K is actually a pretty conservative goal for this cycle. They think anywhere from 150 to 250 is the range, and so 150 more on the conservative side. But I just said 125 is kind of my initial number here. So here's the crazy part. If you bought Bitcoin today, right around 111K, and it goes to 125K, you'd make a 13% ROI on Bitcoin, which I think, can happen easily in the next month. And 13% in 3 weeks or 4 weeks, pretty good ROI. I don't think anyone would complain about that. But instead, we're going to trade it in a way that it can move up even less than 125K. So actually be about 116K based on my numbers, and pay 127% ROI. And so, folks, if you're new here, or even if you're not new here, I think this is really the big takeaway from what Graham and I do, or just really learning trading in general, is understanding that trade structure can radically change the dynamics of the opportunity. The same asset class moving the same amount can turn a 13% ROI into a 127% ROI just by understanding the trade structure. So here's how we actually do that. We do it with an IBIT debit spread. So that's how we actually turn this 13% potential ROI trade into 127% ROI just by using a trade structure. And the structure is a debit spread or a call vertical, where you'd buy to open the June 20. So that's, again, about 25 days from now. You buy the June 20 $60 call, sell the June 20 $65 call. That's called a debit spread. And you pay about $2.20. That's based on, a half hour ago or whenever I pulled the numbers. And what actually is happening here is you are saying that by June 20th, you want to see IBIT go above $65. And if that happens, if it closes above 65 on June 20th, your ROI is 127%. So I'm going to post that in the chat here just so that everyone can see it. Like Graham said, you don't have to panic and rush around to click buttons. You've got time on this trade. But what we're doing is we're betting essentially that over the next 25 days, IBIT can make this move. Okay, this is just trade one. I'm going to give you four, but this is the first one. And the way that actually looks in your brokerage account is if you go up here to IBIT and you click this June 20th expiration here. By the way, we're moving up a little bit right now, so it might pay a little bit more, but you can see right now I have it set on a vertical. Okay, so that automatically fills in these buy and sell calls that create a vertical. The default verticals here might be $1 wide or 50 cents wide, but we're going to make a bigger one. We're going to make a $5 spread here. And the way to do that is to keep the $60 as my call that I'm buying and then make the one that I'm selling a $65 call. And you can see it has bumped up about 9 cents since I plugged in this trade, but still within reason. That's how much I love you guys. I didn't even get the better deal this morning. I waited for Opening Playbook to put in my trade so you guys could all do it with me live here. But the $60 your buy, the 65 is your sell, and it's going to give you a price that's in between the value of that spread, the $5 spread. Here, we're trading it for less than half the value of the spread, which gives us the potential ROI on the other side. So now I'm going to set up this trade. You can see about 228 bucks. I love that TOS does the math for us here. About 228 bucks per contract, about $272 of potential reward, right? And then the only thing is, how many contracts am I going to do? Well, I'm going to do about 40 contracts here. Let's see. You can see that's about 9 grand. So I got to go up a couple more. There we go. So about 43 contracts for me. And let's see if I can get filled at 228. Let's go 44 contracts.
Hey, what's crazy here now, I know the price is moving here pennies, not a ton. But what's crazy here is that we're already basically at the break-even price. So normally when you guys buy options, you got to have it move percent or 2 or 3 to break even. We're already at the break-even price. So
well, especially with something like IBIT that's like a higher volatility where it's going to bake in more moves. So I'm going to try for a second here to get filled at that 20 or 228. I'll give it a second. Seems like some people already jumped in at 229. So I might have to bump up a penny or two. I just wanted to see if I get filled there for a second. Let me see. I can cancel and replace that. Oh wow, we're bumping up a little bit here. Maybe I got too greedy and should have went for 229 at the beginning. Let's try that. I'll give that a second, folks, to sit. Now, another important part here is that you can optionally set a target on this one, okay? So you can see here I have this target right here. What that does is it means that if IBIT shoots up in the meantime, that you can make 100% even without waiting for it to expire and exercise at the full value above $65. So you can set that target. If you get a big move, it'll knock you out. You make 100%, even if you don't actually hit the full target of closing above 65 on June 20th. Okay, so that's optional. I usually do it on this because I have so many contracts. I'll probably set a target on half of them and then leave the other half to run and try to go for that full profit. All right, so I'm waiting for that one to get filled. While I'm waiting for that one to get filled, let me just share my next trade with you because we have still some ground to get through. And I think we're actually going to end up talking about a little bonus opportunity here as well. So this is XLC pair. So this is basically trading the communications. I think Google has some concern and some weakness, and I think T-Mobile has been really strong. So I like to trade these in a pair trade. The cool thing about a pair trade is that if communications takes a hit, big tariffs on something that affects it, and they both shoot down, we have a put that's going to make us some money on a big move down. If communication rips and gets big positive news or just, goes higher for any reason, we have some T-Mobile calls that should make us some money. So basically what you're doing here is you're hedging yourself with two different assets that both have potential in different directions. And so the way to do this is you buy a call on the stronger one, you buy a put on the weaker one. But really, in either case, you're going to be in good shape if you get a big move within that sector. Please note, you have to buy about 3 of the puts on Google for every 1 of the calls on T-Mobile so that you have even risk on each side. If you're buying a $6 call and buying a $2 put, you need 3 puts for every 1 call, and that way you have about an even amount of risk on both sides. If you make 200% on one side and you lose 100% on the other side, you want to make money. And so to do that, you just have to even out your risk. So I'm going to switch accounts here real quick and set that one up here on Goog. Got that.